Good morning, my name is Lorraine of District 32 and I'm here this morning on the local business focus with Garth Davis of Property Powerhouse. How are you, Garth?
Very well, thanks, and excited to be here. Thanks, Lorraine.
It's always exciting getting into the radio studio, isn't it?
Yes, good thing.
So listen, our Ask the Expert section this morning is all around educating people, business owners, anybody out there who may be thinking in investing in property, and what is the right way to go about it, what are the pitfalls, what are the wins, what should we be looking out for in property investment?
Well, with property investing is actually really simple, but it's not easy, and it's really important to get a team of experts around you to help you navigate your way through property investing, and hopefully you can build up a bit of a portfolio of properties to try and help you with your creating some wealth and helping you to minimize your tax. The pitfalls are numerous, and it really starts right from the beginning with getting the finance structures right. So it's really important to sit down and talk with good finance brokers who are experienced in investing, and to get the right structure about how should we be buying this property, how will the bank lend, are we going to the right bank? So there's a whole strategy. You just don't start with any bank, because if you're going to buy 4 or 5 properties, you try and start with your tier 1 banks, and then you move to other banks as you build your portfolio.
Okay, so that's really interesting. Do most people actually build a portfolio? Is that what people's intentions are when they're investing in property, or do they tend to stick with one?
That's a great question, and I think people in Australia do love property, and I think it is the main place for people to invest. There's obviously people investing in shares and in other forms of investment, but property in Australia seems to be where people are really comfortable. The unfortunate thing with that is the Australian Bureau of Statistics state that of 90% of property investors actually stop at one property and don't go on and build a portfolio of multiple properties. And the problem with that is an investor who buys without the right structure and support tend to buy in the wrong property, the wrong time, in the wrong location, or the wrong finance, and they don't have support when it comes along. So property investing, you do hit some speed bumps along the way, like anything in life, and if you don't have the right support structure around you, the easiest thing is to sell. So I've lost a tenant, it's been vacant for 2 months, I'm freaking out, there's no one to help me, let's just sell the thing. The property might have gone up in value, what should we do? Let's cash out, sell it, and pay out and use the proceeds to pay down our own mortgage. But is that really the right thing, or could we have used the equity to go and buy a second property, maybe in another state around Australia in a different cycle?
Okay, so there's a fair bit of information in there. You know, first of all, there's the finance around it, and that we really need to go and get some expert advice around getting that finance to make sure that, you know, the property is an investment and it's not turning into a drag. And the second thing you mentioned there is, you know, the wrong property in the wrong suburb at the wrong time. You know, how do we as potential investors go and start researching this information? What does that mean, the wrong property at the wrong time?
Again, a very good question. And what happens in the Australian property market is that the main capital cities have their own property cycles. So whereas Sydney and Melbourne have been going really, really strong with value growth over the last 4 to 5 years, us sitting here in Perth and Joondalup know that the market's been very soft on price, soft on rentals, but that's part of what we call a property cycle. So it's really important that investors understand that there's cycles. So there'll be times when the market is soft for prices, soft for rents, but that cycle changes, and it's driven by different things. It's driven by the economy, by demand, it's driven by supply. Is there a shortage of properties? Is there an oversupply? And it's also driven by confidence. So where we have been here in WA and our economy has been a little bit soft, confidence is a bit low, so people have been holding back a bit, whereas in the eastern states the markets in Sydney is really strong, so it's attracting a lot of people. The banks are trying to put some levers in place to slow that down because they're starting to get speculators, and I think you must identify whether you want to be an investor to buy and hold long term, or you're going to be a property trader to buy and sell. And what's happening in Sydney at the moment is you're getting these traders that are trying to jump in and get out after 6 months, and they're fueling the market, so they're speculators.
Ah, okay. So do you find, again, typical investors or newbie investors perhaps plan for just the annual budget rather than the cycles, and this is where one of the pitfalls?
Look, it's great for people to take that step, and they won't know everything when they start, but I think it is really important that they get a solid education and understanding. You can't wait for all the stars to align, but I think try and get the basic understanding, find a support team around you, so you've got a good person who can help you around the property knowledge and research, a good finance broker. Let's make sure you've got your insurances in place. So those are really key points to have to minimize your risk, because your first property is going to be a hobby. So you buy it and it's a bit of fun and you get your rental statements coming in there. But once you buy properties 2, 3 and 4, it's a business. And you do have debt against those properties because you have a mortgage, but it's good debt. And it's really important that you manage your property business well.
There's lots of information in there. But you mentioned a few times there are the different cycles in Sydney and the eastern states, and that it's a little softer was the terminology used for Western Australia. Where do you think the economy and the property investment is going? Where are we in the cycle? And when is the right time to maybe start looking at investing in property in WA?
Well, I think it's a really good time to be looking now, and with experienced investors, whatever field you're in, whether it's stocks, shares or property, you want to be going against the grain, and you don't want to be caught up in the hype when everybody's buying. Like in Sydney at the moment, we believe that the market's probably 2 years too hot. So if you bought in the last 2 years, you're probably going to be in for a correction. Whereas in Perth, we believe that the RP data, CoreLogic data, is showing that the median prices are stabilizing, the number of dwellings for sale is falling. So the signals are starting to show some sprouts, there's some green shoots coming through now that this is a good time to start looking. It's still a buyer's market, which is fantastic. So you can negotiate discounts, you can negotiate maybe some extra inclusions. So it is a buyer's market, and it's a time where you can get a little bit more than in a market, let's say, which is an equilibrium. So I think there's great opportunities. And again, it's suburb by suburb, so you have to do your research. You don't necessarily want to buy in a suburb where there's an oversupply of one product. So maybe there's an oversupply of apartments, but if there's a house and land in that suburb, it's got a point of difference. It's undersupplied, which makes it a good investment. So.
Okay, so these are really hot pieces of information and hot tips you're giving here. It's the things that I would never possibly think of when investing. I mean, you said that as well, these are the good times when it's the buyer's market. This is a good time to start negotiating. Do people tend to know what they can and can't negotiate on, or we just don't know what we don't know and we just go and make an offer? Is that what happens typically in the hobby that you mentioned on the first property?
Look, I think the main issue with your first-time investor is they get emotionally involved in a decision making. So it's really important for investors to sit with their broker and sit with a bit of a property mentor and look at the numbers, because really fundamentally the property's got to be in the right location. It's got to be the right type of dwelling that will be rented. So we don't necessarily want a 5-bedroom house in a location where there's only demand for 1 or 2 bedrooms. But the cash flow is really, really important for investor, because they need to understand, will they be able to hold this property long term per week? What are the cash flows per week? So it's really, and to treat the property as a bit of an object, as a widget, that's something that you're going to buy and hold for a minimum of 10 to 15 years. And you don't get caught up, where's the window, where's the tree, it's a lovely little picket fence out the front. So you don't get emotionally attached. This is an investment. It's still got to have good street appeal. It's still got to be a good looking street where a tenant would want to come and live. And the newer the property is, the more rentable it's going to be, because a tenant will come in and say, oh, this feels nice, I want to live here. But my suggestion is you don't mix your emotions that we might buy this house now as an investment and we might move in 5 years' time, or a daughter or son might move in, because then you're confusing what you're trying to do. So if you buy it as your own home to live in, absolutely it can be an emotional decision, but if it's for investing, it must be strictly on the numbers and the facts.
And again, it's great advice. We've all seen the TV shows where people think they're buying, an investment property, and then it becomes their home, and they get attached to the price, and it just ends up a bit of a disaster. So we're nearly at the end of the interview, Garth. Did you have what would your top 3 tips then for people who might be considering property investment now? What would they be?
I think it's like any industry is to get the advice from the experts. So don't talk to your next door neighbour. Don't talk to the person you bump into at the shops. Go and talk to an expert that has, if it's property investing, make sure that they invest in themselves. Do they own a property? How many properties do they own? How long they've been doing that? Also with the finance side, speak to your finance broker. Do they own a property? Are they an investor? So get a good team around you. Get a good accountant, get a good finance broker. Ask the questions. It's really important is how do you find out about things is ask questions. And then as you get them answered, your confidence level goes up. And there'll be a tipping point where the fear turns to excitement because you're starting to understand the fundamentals and you build up the courage and the knowledge to move forward.
I can feel the excitement already. Listen, thank you very much, Garth. That's been fantastic information this morning. Thank you very much, Garth Davids of Property Powerhouse. Thank you for your time.
Thank you very much, Lorraine.